Welcome back. Economists are divided on how the Reserve Bank's Monetary Policy Committee will move with interest rates this week. While some believe the lending rate will be kept unchanged, some believe a 25 basis point hike is possible. They, however, believe the economy is too weak to take a huge interest rate hike.
It will not be an easy decision. Reserve Bank has to balance the sluggish economy and rising inflation. The depreciating rand, high administered prices and high food prices are countering the effects of deteriorating oil prices. While some believe the Reserve Bank has a bit of room to wait till the latter part of the year to start increasing interest rates, some say the possibility of a hike is real.
They have to either start raising increases slowly, meaning 25 basis points now and keep going, or postpone it another 2 months, and when that happens they have to raise it by 50 basis points. So I think the choice between a rock and a hard place, my bet is that they're going to raise it by 25 basis points to get the nation, the customers, consumers particularly, alert to the fact that the cycle of rising interest rates is upon us.
We believe the CPI outlook has not really materially changed compared to the previous MPC meeting, given that electricity tariff increases did not come through as feared, and also given that the oil price has dropped by a nice about $7 per barrel, which will alleviate a bit of pressure on our fuel prices in August. On the other hand, if you look at the economic growth environment, we've seen more signs of deterioration in economic growth, and we believe this economy is just too weak to get a preemptive interest rate increase at this stage.
Consumer inflation is expected to increase slightly on the back of increases in food prices and administered costs.
Our forecast is 5%, that is up from the 4.6% of May. The main drivers will be a 47 cent per litre increase in the petrol price, in combination with a bit of pressure from food prices, as well as price changes in some of the quarterly surveyed items like public transport, rentals, owner's equivalent rent and domestic worker wages. All of those should exert a bit of upward pressure. So we do see inflation ticking up from here onwards, although it will still tomorrow be below the 6% target level.
Inflation is expected to increase going forward and to breach the 3 to 6% target range by the first quarter of next year. SABC News, Johannesburg.